Everybody, good morning. So we got John and Rob and Don and Will and David and Rob, Craig, Arturo, Mark, Dan, Diane, Mad, Kimberly, my favorite subscriber in the house, Frank, Terry, B, Sergio, Ted, Nancy, Donald. Good to see everybody. And then the subscribers like Robert, Diane, Brian. Don't recognize your name, but hey, welcome. Nikki, David, Alan, and Larry up at the top. Good to see everybody this morning. Welcome, welcome. It is Tuesday. Got an alert. Jeffrey Turmer is live. Cool. It's Tuesday, August 26th. Cambricon, the company you've never heard of, doubled, right? So while everybody and their grandmother was glued to the screens watching NVDA, we're waiting for this earnings report for NVIDIA coming out. Things could get spicy. Something absolutely wild happening on the other side of the planet. And I bet 99% of you have never heard of Cambricon, right? Picture this. This Chinese tech company quietly doubled in the last 3 weeks. Wow. It's become the most expensive stock in all of mainland China. It's literally eating NVIDIA's lunch in China. Oh, did I mention has a market cap of 81 billion so far? At least in US dollars. It's incredible in won. It's like incredibly high. Anyway, I don't know the conversion from won to dollars, so I have it all converted. $81 billion basically in US converted currency, and not many people in America talk about it. Yeah, thought it might get your attention a little bit. So here's a story that Wall Street doesn't talk about. Here, meet Cambricon Technologies, and no, this is not a made-up name from some sci-fi movie. This is their company's name. And while we've all been assessing over NVIDIA and the AI chips that they're producing, the Chinese have been quietly building their own AI chip empire, piece by piece. And here's the kicker. They're not just competing with NVIDIA anymore. They're actually winning in their homeland market. Remember all those restrictions we put out there? This is why Jensen went and kissed the ring. Remember when everybody said, oh, China can't innovate, they can't. All they do is copy. Well, somebody forgot to tell Cambricon that memo. Beijing-based AI chip maker just became the most valuable company in China. That's kind of crazy. This is China's biggest semiconductor manufacturer. For those keeping score at this point, we're talking about a company that went from relative obscurity to being China's most expensive stock, trading at over, 1,384 won per share. But here's where it gets really interesting and why you might want to pay attention. See, there's this little thing called the US-China trade war that's been creating some absolutely delicious investment opportunities for those willing to connect the dots in places where there might be opportunity. The US government, in all its infinite wisdom, decided to restrict NVIDIA's chip exports to China. And they've been doing this before the current administration. This goes back to the last administration. The results, NVIDIA's market share in China has plummeted from dominating at 95% before 2022 to just under 50% today in 2025. Now, if you are thinking like an investor, I hope you are, what happens when you create a massive vacuum in the world's second largest economy? Somebody fills it. And that somebody is Cambricon right now. Here's the beauty of, and kind of the irony all in one, maybe the beautiful irony. Every export restriction, every trade sanction, every America First policy is essentially handing Chinese AI companies a gift-wrapped monopoly in their own domestic market. It's like the US government is playing wingman for the Chinese tech stocks, and they don't even realize it. Bernstein, the fancy analyst who charges 6 figures for reports, well, they just forecasted that NVIDIA's Chinese market share is going to drop further from 66% in 2024 to 54% in 2025, which is, we're already starting to dip below that. Meanwhile, guess who's picking up market share? Companies like Cambricon, Huawei, and other Chinese AI market maker or Chinese chip makers that you've never heard of. We probably can't even pronounce them. I probably can't pronounce them. So, because this is where things get really spicy, Cambricon stock has gained over 562% since September of 2024. That's not a misspeak there. 562%. While the S&P index fund chugging along at a modest pace. This Chinese AI chip maker has literally gone to the moon for those who jumped in on it. But wait, there's more. The Chinese AI sector market sector, it's projected to grow from $8 billion in 2025 to $31 billion by 2030. That's a compounded annual growth rate of over 30%. For context, that's faster than Bitcoin's average rate of returns since it started. And we all know how that went for early adopters, right? Here's where things get me excited, and this is where smart money might be paying attention. Fresh capital is rotating out of Chinese bank deposits and into tech stocks. We're talking about a massive sector rotation happening in real time, and most Western investors, myself included, completely oblivious to this fact. The Chinese government isn't just sitting on the sidelines either. They're throwing everything they've got into Made in China 2025 initiative that they've been implementing, which is basically their moonshot program to become self-reliant in semiconductors and robotics and AI technology. When a government with $3.2 trillion in foreign reserves decides to back an industry, maybe you should pay attention a little bit. Now, here's where things potentially get interesting for us investors. While everybody's been focused on NVIDIA, whether they can maintain the $4 trillion valuation, there's been a massive arbitrage opportunity sitting right under our noses in Chinese AI stocks. Think about this way. You've got a company that's been benefiting from both massive government support and protection from foreign competitors. It's like having a moat filled with crocodiles, and the government keeps feeding the crocodiles. I mean, it's not just a competitive advantage, it's basically a fortress. But here's the thing that really got my attention, hopefully in a good way. Most American investors won't, don't know how to invest in Chinese stocks because all the geopolitical noise and all the crap, and it's not easy to just buy it on Thinkorswim or Tasty Trade or whatever. Webull, Robinhood, that means less competition for the smart money that's willing to look beyond headlines and focus on the fundamentals. Cambricon just became the most expensive stock in mainland China, surpassing even, I'm not even sure how to say it, Quichao Moitoi. And if you know anything about Chinese markets, you know that Moitoi has basically been the Berkshire Hathaway of China. When a tech company dethrones the king of Chinese luxury goods, that's not just news. This is a seismic shift in the economy. So the company's market cap hit $81 billion in US dollar terms, making it larger than many S&P 500 companies that you probably might own in your own portfolio, especially if you have something like SPY or a broad ETF that covers more tickers. So the kicker, Western analysts, they don't even pay attention to this. They don't cover it properly. Too busy trying to figure out if NVIDIA's next earnings is going to be a beat. Now, before you go liquidating anything and trying to figure out how to buy Chinese AI stocks, let me give you the reality check here. Investing in Chinese markets is not for the faint of heart. There's a regulatory risk, currency risk, and the ever-present possibility that geopolitical tensions could make things even more complicated than they already are. But here's what I know. The biggest fortunes aren't made when you're early to massive secular trends. All right. Excuse me. They are made when you're early in massive secular trends. I mean, think about it. Like the internet, if you could pick the right horses early, you probably made out pretty good. Now, there's usually shakeouts. And right now we're witnessing the birth of parallel AI ecosystem that's being turbocharged by the world's second largest economy and backed by a government that's determined to win the AI race. I mean, this is an arms race right here. Whoever wins is going to control the next phase of the planet, probably. So while everybody else is arguing about whether NVIDIA is overvalued at 65 times earnings, maybe it's time to ask different questions. Where's the real opportunity? Right? It's not just domestic. in this game. The smart money, American first, we could lose this race and be dethroned and not even realize. I mean, this is the reality check here. You got to take the positions you possibly can. The question is, can you be early to the party? Or when we read about this in the Wall Street Journal 2 years from now, it's going to be too late. So that's it for today. That's my research for today. I'll try to figure out how, for my, for the best of the best investors I've got, my insider group, I'll try to figure out ways to get exposure to this easily. I don't know that there is an easy way. For everybody else, stay safe out there. The account you save may be your own, as always. So jumping in, how do we make money today? All trading involves a substantial risk of loss, no matter what you trade. Trading, you might lose money. Past performance, not necessarily indicative of future results. Just because we predict something doesn't mean it's coming true. Chinese can fold. I mean, this presentation here intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, hire and consult a financial advisor. Remember, stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. Be careful out there. The calendar for this week, fairly benign. And here we are on Tuesday. Not a lot happening. Get some consumer confidence, manufacturing. We saw the new home sales number. Green, but it was pretty dismal. The prices still below. The new home sales prices still below existing home prices. Putting a hurting on the market. Not looking good. Thursday, we get preliminary GDP, some unemployment, all the normal stuff. Pending home sales. Fed member Waller speaking. I guess the big news overnight, Trump saying he's going to fire one of the Fed chairs. I guess we'll see. Fire for misconduct. She coming out this morning saying she's not leaving her job. She's not resigning. Should be interesting. Core PCE. We get PCE, I guess, on Friday. That should be interesting. It's weird that they just have the core, not all the rest of them. Let's go check look at this. DJT working a deal with crypto.com. CDC supposed to buy $50 million worth of shares. Popping this morning. Can we stick it? We'll see. We shall see. How do we make money today? How do we make money this week? Let's look at Friday. Economic numbers. 1, 2, 3, 4, 5, 6, 7, 8. Should be 8:30. Yeah, there we go. PCE coming out on Friday. Personal income, personal spending. Retail inventories, X auto. It should be some interesting numbers. Right there. 8:30 on Friday. I'm gonna wrap up the month with that, right? Last trading day of the month. Next Monday, holiday. In case you, I'll be doing a crypto special next Monday. 5 p.m. today, I do my request show. The only time of the week I do requests. If you're a channel member, you get unlimited requests. If you're just a subscriber, we'll cover the rules on the show. So if you want to be a part of that, make sure you subscribe, hit the notification, set a reminder in your phone, come back at 5 p.m. We'll do that. We'll do this thing. I'm long 1,200 shares from basically, I guess my cost right now is like $17.50. So this is a nice little pop. I have $20 calls sold against my shares. I'd love to see it pop. I'd love to see it up here. See what happens. I sold puts, sold a lot of puts and got put shares. So now we're sitting here. Now, just look at the technical pattern. There's the ball, there's the high, there's the low. This might be corrective if we stop in this vicinity. If we can make it on up here, kick off the more bullish trend here. Taking it back, fill the gap right back. You know, the crypto.com deal, they were going to buy. They did not announce a buy today. They just committed to buying. So they'd love to see this dip right back before they buy their shares, because nothing says deal like buying at low and selling at high. So there you go. There's more to it. So, Goose forgot to sign in. Morning, everybody from Canada. Hi, Gabriel. Welcome to the stream. All right, looking at the overnight action. Not particularly spicy here. Under the roadmap line, though. We dipped in here yesterday. Can we break back higher? Or do we continue the softness? Now, we had levels yesterday. And we're sticking above the 15-minute on the cash index. So far, that's good. Start getting below that. Got to watch this level right here. That high right back there comes into play. If we get below that, probably going on down lower low than we were last week. Dun, dun, dun. So that's Friday's pop. And we're retesting. If we get below that high from Wednesday, probably going below that low from, was that Wednesday or Tuesday? Wednesday. So Wednesday's low to Wednesday's high. If we break below Wednesday's high, probably going below Wednesday's low. Why? Why, you say? The proportions, baby. The proportions. I want to see it hold in here, go higher again. Yep. So that's the levels. 64.05. Start getting below that. That's the warning shot. All right. Well, we can dip down there and go higher. And the market can always do whatever the fudge it wants to do. The most likely, the high probability type stuff. If we start making candle closes down here, probably going on down. That's just the way it is. How far down might it be? Run the high, run the low, run the high, run the low, and it potentially put us down here around 6,300. That's how important that level is. So if we don't hold, that's going to give up potentially another 100 points if we don't hold that high right there. Now, as long as we're doing bullish stuff, new all-time high, those targets jump up, turn that off. Probably up here around 65, 62. Right there. Right there, right there. And then we'll probably pull back again, and then we may possibly go higher. That'd be wild. 61.30. So 65, 62, big major resistance. We'll see what happens. In Q, look at the overnight action. See if it tells us anything. Smearing up the roadmap line on the 15-minute. Dip below, pushing above. Just smearing it all up. Smearing it up, smearing it up. Doesn't really tell us anything. Boy, we accelerated that. Now, let's kind of... Same situation here. Like, we need to stick above these highs. So if you want to pay more attention to NASDAQ, if we start getting below those highs from Thursday, which we got really close yesterday, we start getting below those highs, NASDAQ might have more downside pressure. And that was the futures. This is the cash index. Why do I look at the futures? Because, all right, you see these gaps and stuff? They create they create these points where we don't know what, like, missing information every time we have a gap. So I look at the futures because they trade 23 hours a day, 6 days a week, and fill in, you don't really see any gaps in here. Occasionally you get one, but you don't really see much gaps. So more complete information. That's why I usually look at the futures for both of these. 30 minutes still sit on top. That's good. Good, that's good. All right. Russell came down for a bounce. So this will be an interesting tell. We don't really have that spike that we're trying to stay above. That's kind of muddy. We did though. This is the warning sign. We did break above that high from back here in January, February. And this high, this right here, we broke above it. We back tested it. We hold it, break back above that little high right there. We're probably going out to new highs on Russell. 2,600, 2,700. That'd be the upside targets there. So if we confirm a break back above, you can put on a long and make back some money off the protection if you wanted to. I'd size it about the same size, be very cautious, make a little money back on the protection trade we put on, because this looked like it could roll very easily. But now price action is telling you something different. Starting to have some signs of bullishness. Oil bouncing off that 4 hour, rejecting the top so far. Top of this resistance band. And how did you come up with that resistance band? Comes from the May of 2023 low back here, combined with this price action more recently here in 2025 to create a support resistance band. We dip below it. We're back testing it. If we break down below this right here, probably going down to 50. And if we do that, this might happen fast. Might. It kind of tips the odds it'll happen fast over just being a long drawn out thing. So see what happens. And that's relatively fast. You know, the oil market, we hunt for a bottom for a long time. So been doing this correction since we topped in 2022. So relatively fast could be like by December. It could be a fast, I mean, sometimes we get a fast move. If we dip down here, don't be surprised if we see a hot war kickoff in the Middle East. They need higher prices on oil, down in the 50s and the 40s. Not going to be good. Gold. Still grinding in here. Grinding. Look at the pattern. Big pop, grind. Big pop, or little or big pop, grind. This is running out of momentum here. To watch out that it's a lower high. First move down, retrace, could come up to 34.50 and take the next leg down. So first move down, the retrace, 618, bounce off of it, and go cruising down. So sometimes it's easy as that. Need to put that on the actual high. Click save. Bitcoin, my goodness. My goodness. Let's dip down here and take a look. Have that low down here. There you go. I guess this is the clearest, easiest way. So first move down, the retrace. Next move down. If things are going to go way on down, we might see we're not going to hold here. If we're going to bounce, we need to hold here. If we don't, not looking too good. Now, is this part of a bigger correction, a WXY, or is this just, that was the final move up, and this is in A, B, C, Can we hold in here and go higher? Not sure at this point. Sure. So big support zone right here. Just a little bit below us. Not even much at this point. I mean, we got really darn close at this point. Nope, wrong thing. Maybe price label. See if we come down here. There's the top of the roadmap line, 107.534. There's the bottom of the current candle, 108.757. It's not much to go to dip in here. Now that's if A equals C, first move down equals the second move down, 105.595. And then the 1272 for that, hiding behind the 102.586. So we could see like it very well could dip down right in here. This could very well be where we dip to. Been warning about that for a while, that Bitcoin had the potential to dip. MSTR needed some further downside. It's not really playing. Like we already dipped down in there last week. And then Coinbase has been needing some further downside. We need to touch that daily roadmap line. So can Bitcoin bottom without all these things coming into alignment? Like, Ethereum, so far so good. So far so good. That what I mentioned yesterday. We hold here, sets us up to blast through that resistance. So watch for additional softness here. If we start below 4,200, not good for ripping higher. As long as we hold right here in this vicinity that I drew yesterday. If you missed it yesterday, go back and watch. Replays are always available forever. I don't delete anything off the channel. 6,200 right there. Next upside potential. So blasting off from 40, you're like, well, how do I get exposure to that? ETH UETH TETHA. There's a few ways. Buy shares, play options. I did a complex strategy of various different things. So, NKD, still working on this correction. Can we hold that breakout? We're back testing it. As the world shows, like when global liquidity is not blasting off higher, we don't see Bitcoin going higher. We don't see ES really going higher. We don't see NQ really going higher. So as this stuff churns here, now if this thing can pop, break out, if we get this move back up, break through the 618, break through the prior high, probably set up the move to maybe 48, 49, 48, 49, 50,000, possibly 53,000 if things get really extra spicy, extra crispy spicy. So I want to see that bounce. Now, if we don't, if we start on down a little bit more, we may see more of a flush out in risk on, risk off markets. This support box and the roadmap line back down here. That would be where we expect us to come down to, and we can see continued softness in risk on markets like ES, NQ, Bitcoin, S&P 500, NASDAQ, and Bitcoin. There you go. There you go. So keeping an eye on this baby. Dollar. Where we chooching at? Right here. Grinding, grinding, grinding. That was a nice advanced lower. Retracing a bit though. So we've got this A down, this B retrace. And we're chopping in here. An ideal target for this baby is right down in here. If we're going to stop with the correction, the current correction, if we're going to accelerate this further down, probably reach down here. So I want to see it bottom here and turn higher, and that could take the dollar higher. But if we're going to experience more downside on the dollar, probably see this push down in here, maybe bounce and push on down, possibly. That's the levels I'm watching on the dollar. Mag 7 stuff, pop back up to the daily, refit it to this screen. Apple has this first move down, second move down potential. And until it proves otherwise, this is my expectation for Apple. First move down, the retrace, second move down. Could go down to there. Back in the 140 area. You may not agree. It's kind of the way it works, though. Buyers and sellers differing on opinion. That's what makes a market. Amazon has that same potential until we void the setup. We have a series of lower highs already in place and potential to flush down here, potentially 140, 150. Similar numbers to Apple. It's kind of funny how they've all coalesced on similar price ranges. Google has finally filled the gap, but seemingly not able to hold it so far. 220, 230, those are the upside targets if we can push on through. If we start retracing, we come all the way back down and make a double bottom. Doesn't seem highly likely now that we're up here. Seems more likely we're going to poke right up here. If I got off of it here because the high probability that we might extend lower. And we just been grinding right up into the gap fill. That big gap in there. Now, typically we get a big negative reaction because people have been trapped since back here. And when they fill the gap, we get a negative reaction. So watch out. Roadmap line right back in the 175, 180 area would be the first support. If we break that, might be heading back to the lows. But still, a higher probability at this point where we've come to, if we can push higher at all, these numbers right here. I'm not playing it because it's just not clear. Meta, we tagged that upside and we have the potential to retrace somewhat deeply again. Microsoft. We did when I talk about the first move down, second move down thing, Microsoft did that starting last summer into April. And then we're up 62% off those lows to that high. Now we're retracing. Sit on this fib. If we don't hold that fib, we'll come retest this fib. If we don't hold that fib, we'll retest the breakouts. And look, the roadmap line just happens to be there. So pretty major support right here, around 470. If we can hold that, sets it up for that push out to 565. NVDA, grinding right here. $4 trillion grinding right here. The upside potential, 212. That's the next upside resistance zone right up there. For NVIDIA. Tesla, looky. She might break out and run. Be careful betting against this horse. 368, 378, 406. These are we have this upside resistance here and this upside resistance here. We bust through those. 368, 378, 406. Be the next points where we might experience some pullback. We're launching on out. I do expect this to go potentially much higher. Got targets up here around 600 to 700. Love to see 500. Been looking for 500 for 4 years or something like that. I have quite a bit of exposure long on Tesla. It's a bullish chart right now. Love to see it just pop. Netflix grinding in here has potential to reach up and touch that 1264 area. The downside down here, right around 167. If we can complete this first move down, second move down pattern. And we have some gainers. We got some decliners. Not very many decliners. Very few things. And I brought some setups. I brought 9 setups here. So let's just jump over to the setups. Now, for anybody that might be new here, let's just pause for a moment and talk about what this setup is. Just draw it here. So we're looking for something that's maybe been in a trend, maybe a downtrend. Then it pops up through this roadmap line. Then we get a retrace down to the roadmap line. Now the roadmap line would be only out to here. When we got to this point, and we run the fib line from the high to the low, wherever the low might be. Now, when price makes a move up and closes above that 618 level, right here, that's your entry. We're looking for price to go from here to here, the 1.1448, which is 90% of the way to the 1272. Just take 1.272 times 0.9, and you get 1.1448, and that's that purple line. Now, across tens of thousands of trades, 74.8% of the time, I think it might be hundreds of thousands of trades at this point. So I've done like 57,000 just on daily charts, done 20 or 30,000 just on the 1 minute chart for the SPY, QQQ, IWM. Yeah, I mean, it might be hundreds of thousands of charts now. Lots of back testing has gone into these numbers right here. All time frames, this works. All right. It's not just a daily chart, not just an hourly chart, it works all time frames, same pattern. 74% of the time, we get the close above this 618. We go up to the 1448. Now, you may be like, well, what about more? That this number drops down to 70% when we get to the 1272, and it drops down to 35% to get to the 1618. So, high probability pattern, high probability trade. 75% of the time we do that. That's something I can count on in the market. I can trade, I can do. Now, time-wise, on average, no matter what time frame you're on, usually takes about 45 candles, plus or minus a couple, depending on what time frame, but about 45, not percent, 45 candles. 45 candles to get from here, from the entry to the target on average. Now the standard deviation on this is pretty big at 35. So that means to get 99%, you got to take 45 plus 35 times 3, and you roughly get to about 150 candles to cover the 99 percentile. Now that's candles. So if you're talking about a daily chart, we're talking about 200, 210 calendar days. We're getting beyond 6 months. If you're on the 1 minute chart, you're looking like 3 hours to cover 99%. If you're on the 2 minute chart, like 6 hours. Kind of goes that way, right? 5 minute chart to 5 minutes times 150 candles. That covers you 99%. But that still leaves 1% of the setups that can exceed this number. And that's the long tail. When they talk about a long tail curve, it's like it approaches to zero but never gets there. That 1% lives out here, and it could take an amazingly long time. So sometimes if you're playing options, you run out of money, run out of time, run out of money. So that's the setup. All right. Now 9 of these are set up with entries today. We're going to take a look at them. Got the high here, we got the low here, we got the entry right there. I've got a tool that kind of shows them to me. Here you go. See, there's the entry. Looking for that target, 41.35. 26 trades in the history, 85% of the time. 1.4, not the strongest. Now, under 30, not really statistically significant, but this is running pretty spicy. And 4 losses, not likely to destroy this number here. So this one's running pretty good and indicative that 4 more trades is not going to wreck this win rate here. And with that 84, with the 75% pass, it's likely that 4 trades, 3 of them are going to be winners and 1 of them might be a loser. And that would just further cement this win rate here, right there. So that's the upside target. This looks pretty good. Now the profit factor on average across tens of thousands of stuff is like 1.28. This one's running a little better at 1.4. My favorite stuff is when it's above 2. 2 plus. That's my favorite. That means it's typically pretty profitable stuff, but the losses aren't so big. But that one, it's all right. So there you go. There's one. Next one up, FCG. Remove. Now this one's been kind of a downtrend, a little bit choppy, not really trending. So this is a trend pullback continuation pattern. Where's the trend? Not really very clear. Now, very micro, we had it blast up. We did that little retrace, and that big spike, not really the trade it found. It found this little baby one right here, which is, again, part of a downtrend. So this is counter trend for this trade setup. Now, statistics don't care about that. That's the entry. That's the target. That target can stay intact, and we stay in the downtrend. So that could work out. IMAX. Here's the high right up here. Here's the low right down here. There's the entry right there. Looking for the move from here up to here. It's the high probability. Now you might be like, all right. So you've talked about how the entry works, how the target works. What about the stop? The stop is always $1 below the low, whatever the low is. So you go right there and you take $1 off, and that's where you put the stop. Now, if you're savvy to what I just said, the lower the price stuff, especially down near $10, $1 is 10% risk. $1 below the low, that's 10% more risk. So lower the price stuff, the more sketchy that stop gets. Now, why don't I adjust it for ATR and whatever? Well, 1, that's difficult. 2, just statistically, $1 works. Like, it works across all time frames. It works across all tickers. It works across everything. So $1 below the low, that's what I use right there. So there's the target right up there. Stop right down here. There's your trade setup. 20 trades, 65, 1.08. Not the strongest. But 20 trades doesn't really mean much. 10 trades to get statistical. So lean back on the historical average of 74.8. Oops, 74.8. And 1.2. Right there. It's nice. I mean, it's trending up, so that one might work out. This one worked out last time right there. Next up, LXU. Here's the high, here's the low, there's the setup, and 9. So this one, back to that bigger risk on lower price stuff. This one, the stop's at 7, so 6 is a big down. It's a wide stop, so you have to make your own choices. 30 trades, that's statistically significant. 70, that's under historical average, and that's a negative profit factor. If you're unfamiliar with profit factors, click the little button here. That's the gross profits divided by the gross losses. So this means we've made $4.78 on a trade, and we lost $1. I mean, lost $10, excuse me. So that means when you divide it out, you get 0.478. In other words, for every dollar you lose, you make 47 cents back, and that's a net loser. This ticker, I wouldn't trade it. It's low price too, so that's what happens when you get these low price ones. They tend to have bigger losses. This one, already in the trade from back here, but we have this nice new swing right here with a smaller target, 1468. Yeah, I probably wouldn't trade it. I don't like trading low price stuff. Just, things don't always work out in my favor. There's the high, there's the low, and 48.71 for Sphere Entertainment. Doesn't have the best history either. UHT. Here's the high, here's the low, there's the entry, and 42.50. VLO, Valero. This one looks pretty interesting. It's a net loser, though. I think energy is going to go higher, so this one may work right there. 158 target. I usually go a little bit more conservative than even the conservative target when I'm getting out, just because I want to get the fill. When, you know, sometimes we just pop up and then drop back down. See that plenty of time. So dollar below low, somewhere around 130. XOP, oil and gas exploration. There's the high, there's the low, there's the entry, and 134 targets. This is kind of in a downtrend though, so be careful. Stopped out last time. Stopped out the last 2 times. Has a pretty smoking hot profit factor, but not statistically significant right there. So most people don't talk to you about statistics of a trade setup. They'll talk to you about high probability patterns. They won't put any numbers to it. They'll just spout some crap they heard somewhere else and won't prove it to you. Be careful out there. I know it's not super interesting because half the people dropped off the stream. But how do you make money? You do high probability things. It's not always glorious. Repeating things that worked in the past. AMD here, probably coming back to the roadmap line, if not back down in this area right here. Got a 618 retrace potential. I'm waiting for the opportunity to get into this one. It has a massive potential upside if we can bounce and hold it. But we need to find support. This is a potential new trend. Pullback, continuation. I need the pullback. All right, I don't just jump in. It's not the way it works for me. Lily, potentially bouncing. Got that gap down there. Resistance we need to fill. There's ETHU, ETHT, those two I talked about. SUPX, Super X AI. Look at that thing run. Wow. Congratulations, you got on that one. TLN. Looks ripe for retrace. Oklo. Looks ripe for retrace. Let's. First move down, retrace. Second move down. Now we came up shy of the target too. So 318 on the upside and roadmap line. That's your. This is your guardrails here. But that's first move down, retrace. Second move down before we pop up probably. FUTU, hit the target. Watch out for this thing can be ripe for a retrace. STZ. Sitting down at the lows. Can't get off the mat. We may dip down to that 150 area before we can get off the bottom on Constellation. ABVX. Yeah, I'm not touching that. Pharma. Biotech Pharma. All right. I'll be on the profit panel today. If you want to come hang out, it starts at 11. It's prosperitypub.com/profit panel. Otherwise, have a great day, everybody. Can't you say maybe your own? I'll be back live here on YouTube, 5 p.m. for 30 minutes of awesome. The only request show I do a week. Have a great day.